Are we going through a crunch time? One side there is inflation, one side there is crude, credit offtake has not picked up, rural demand is not that great. So what we thought, let's say, would be the shape of the economy in September, October, November 2021, we are nowhere close to what the consensus bullish view was. In fact, every bullish thesis is completely getting challenged.
Yes, Nico, you are very right on that. In fact, even for us, we have done two GDP growth revisions in consecutive months of January and February, which is slightly unusual. And these are downward revisions to our numbers. That's primarily stemming from the fact that the quarter, October-December quarter, was a quarter of two halves. In the first half, till the festive season was there, we saw a very decent economic recovery. But once the festive season was behind us, we saw some flattening in the recovery curve. And then the Omicron wave came in late December, in January, which again pushed us back for a little. And now in February, we are returning back to the pre-Omicron levels. But what is happening essentially is that there are repeated supply side shocks that we are seeing, and unanticipated supply side shocks as we are recovering from Omicron. We now have this Russia-Ukraine conflict as another headwind for growth. So that uninterrupted economic recovery paths that we were building in our forecast, that doesn't seem to be working fully. Unfortunately, economists are not in a great position to forecast these supply side shocks. So we will keep on tweaking our GDP growth numbers based on the extent of these shocks. But I must say that this forecast revision downward for the last couple of months have not been something that we had thought of, as you said, even 3-4 months back.
Sandeep, first let's understand your view. Are we nearing a panic bottom?
So I think last time also explained the best way of looking the fear and when this uncertain environment is through, let's understand through global volatility or fear index. Okay. Now the global volatility, the VIX itself has spiked closer to 37 mark, and since then it has corrected, and so is the case with India also. Okay. Now let's understand two things. Whether we can say with good amounts of confidence that volatility has peaked out, maybe answer is yes. It looks like the volatility has peaked out, which means that fear is also peaked out. Okay, but should we say that volatility has settled down? Answer is clearly no. Volatility has still not settled down. Let's say India, which should come down below 20%. We can say that this volatility is settling down, and then we can be more confident about participating more aggressively. Okay, and so is the case with US also, maybe closer to 37-39%. We have seen it has to also correct below 20% or below 22% before we can take a very aggressive view. But if I go with the probability that whether we have peaked out, answer is yes, because we work on the volatility band theory, because we believe this is not a world war like a crisis sort of thing. This is a small invasion which is unfolding right now. So it is very unlikely that we get into the last phase of the band of the volatility, which means that India VIX has to cross above 36% mark and the global VIX has to cross above 39%. If that happens, then it's a clear indication that we are heading for much bigger crisis. But given the news flow, given the data which we are seeing right now, it doesn't look like. Okay, so that's the reason I'm using the word on the probability side. The probability is that we have already seen the spike in volatility, but volatility is still not settled down. It might take few more days before it settles down. And I also just want to remind you, let's understand this implication. In fact, in the month of December, okay, on somewhere closer to 18 December till or 20 December till 18 January, we have seen extraordinary spike in the market, which was like as good as 12% move or nearly 200 points move we have seen. So market is actually preparing for that because market is very, very light, and assuming that if things settle down in next 3 or 4 trading session, or maybe just like this weekend sort of thing, then market can also give you equally sharp up move the way which happened in the month of December. In the 8 or 22 trading session, 12% move happened in the Nifty. So I'm not ruling out that probability also, that scenario also.
Harsha, we all know the reason why markets are volatile. Now, whether it is Russia, whether it is Russia-Ukraine, whether it is Fed, or maybe a market which was due for a correction, whatever may be the reason. The point is, how do you approach this patch of volatility?
The list of concerns is only growing. Initially, for the last couple of months, we were worried about how change in monetary policies across global banks is going to affect equity valuations and emerging market flows, etc. And now Russia-Ukraine conflict has added to at least in terms of concerns. I would say that it's too early to say what would be the impact both in the short term and in the medium term on the markets, because we are just starting to see some impact on currency markets and financial markets. And we are just a few days into the conflict. It remains to be seen how it develops. In this scenario, I would still believe that once this conflict is behind us, monetary policies around the globe will become the central issues for the markets. So to that extent, it's very difficult to say that the volatility will die down once the conflict is kind of resolved. It may take a breather, there may be a relief rally for some time, but I would say that the change in monetary policies around the globe will be the central issue and will continue to bother markets in 2022 for quite some time.